Well, hello everyone. I am your host, the Cowboy. This is Elliott Wave Cafe. We are on April 6th and another episode of the chart of the day. Today we'll take a look at some commodities. I briefly touched yesterday on metals and mining through an ETF called XME. And today we're going to take a look at the DBC. This is an ETF that tracks a bunch of commodities across the spectrum and where you can pretty much find what's going on in this land. And here is kind of what it contains. If you guys want to take a look, it's called DBC, Invesco DB Commodity Index Tracking Fund. And it's got about 58% almost in energy. And you can see, from Brent crude gasoline, WTI, natural gas, and then it goes into agriculture, wheat, corn, soybeans, and sugar, and then some base metals and some precious metals in a little bit of a, smaller percentage. And then it's got a bunch of, T-bills and things like that and bonds. But it is basically a pretty good indicator of what's going on in the commodities across. And clearly, you see a very, very big rally since we've hit the those kind of March, April lows. When all the stocks actually when we had the big flush in the beginning of the pandemic, and then we've been rallying ever since. And this one has had a pretty strong return here from $10 here to 28, so about 172% increase in this fund. So what I've done here is I've kind of squared off this price section, and I'm interested in what would you have for a count from this highs to these lows, and then what do you think is likely to happen next into this fund. And this is a 1 week chart, so it's a little bit it goes obviously across 2 years and a little bit. So actually it's about 2 years because we're back in March, April. So let me know what you think. Stop the video and try counting this and see what you can come up with, and then I'll show you here my count in a second. Let's spend a little bit of time looking at what I'm seeing, just kind of like we usually do in this daily videos in here. And pretty strong impulse up here. I mean, it's almost vertical looking, like I think in terms of its angle of ascent, it's one of the strongest we've seen so far. And then you have another one that's kind of happening back in here as well. Now, the rest of them are a little bit smaller, with sharp increases, after corrective patterns. So usually what I do is I take a look at these structures and I try to identify, which leg looks most impulsive, what can qualify as a third, what can qualify as a one, what can be a fifth wave, and I try to make sense of, what the market is basically telling us. What is it, what's whispering to us. And sometimes I take also, angles, and I just place it in here, and let's say I take that, and then I copy it, and then I move it here, and I see there is a little bit of a difference there between the way this move kind of happened and the way this one, how fast it kind of accelerated. I use sometimes volume, and I look and see, what happened into these spikes, and then I compare with the rest as well, and I go and I put, for example, a wave 1 in here, and then you can kind of see. Let me get rid of that. Okay, I don't know what happened there, but let me just kind of go back. There you go. And I'm going to copy this over and put it up higher like that. Okay, let's do it this way. So there you go. So you can see, right, the angle of this ascent was a little bit, slower, right, in terms of its strength. And then you have, a pretty strong move in there. Then you're kind of slowing down a little bit, and then you're going up and you're shooting higher. So, the reason why I do this exercise is just kind of see, what's the personality of these waves, right? And we know that in commodities, if you've been, watching markets for a while, usually the fifth waves in commodities are some of the strongest and most impulsive waves. And you can see in here, and they're also extended most times. And you can see in here, the way I kind of measure this up, that this wave, just went almost vertical in here, and then obviously, it could not sustain that level of a move, and it completely kind of reversed in here. And now we're doing a little bit of a consolidation. So my first thought goes, that this is a fifth wave type price action. And then, that somewhere in here, I got to have a third wave moving on in here. And then I have a wave one of these lows. So just by looking at this, I can kind of space this move out, and I can go and say, fine, here I have a break in trend, right? So this could be a 1 and a 2, and then another one. Obviously, it's when you kind of started this move higher, it kind of started from back there, right? That's another move that I have. So that kind of leaves me with the center piece right in there. Now, what do you do with this? I mean, if you look at it, you kind of have a 5-wave structure in there. You can look at this wave, you can look at this wave, and then you can look at this wave, right? So you got a wave 1, a wave 2, and then a wave 3. So 1, 2, 3, 4, and 5. There is no break in the rules here, because the wave 4, it does not terminate into the territory of this wave 1 in here, right? And then this fourth wave does not come in there. So let's see if we do it again. So wave 1, wave 2, 1, 2, 3, 4, 5 for wave 3, wave 4, and wave 5. And then if I do this, here is, kind of just copy and paste those moves in there, and then you can kind of see how, nicely almost equal in size this, let's say this correction here moved. And I'm going to make this a little bit thicker, right there. Right, so this is how you're trying to find out what's the best, at least in my view, what's the the best approach that you can have, because sometimes you might go over account multiple times, and you're trying to, I mean, in a quick rush, obviously you can just say, well, this is am I starting here? This is a 1, 2. Am I starting all the way back here? It's a 1, 2, 1, 2, 3, 4 and 5, 4 and 5. Then you're getting left with other type moves. And here is one of the reasons why, I think that this move terminated here instead of here, because if this is a terminal wave, then that's a 1, that's a 2, you need a 3, you need a 4, and you need a 5. So especially because this move here was so strong, I think this move in here is a truncated fifth. And if you're not identifying that, or if you're, missing that, your whole count structure here could change, because it matters where you're beginning the wave 1. So if you're beginning it from here and you go in a 1, 2, right, then you have to do a 3, maybe 4, and then what is this, a super extended fifth wave? It starts to look quite ugly like that, right? And then, I mean, you can do a 1, 2, 1, 2, right, like I said, and then 3, 4, and 5. So that's a 1, 2, 3, 4, and then you got to do another 1, 2, 3, 4, and 5. So maybe you still push higher. So this could be an alternate count where, you could work it out like that. Here is a triangle, like in there, like that. And I'll do this live for you guys, so you can see why. I mean, it always seems easy sometimes, but it's not as clear as you would think. If it would be, everybody would just be, racking in, trades and money all the time, because, it would be just like the easiest thing ever. But so here is the count, right? You will go in a 1, 2, right, and 1, 2, 3, 4, 5. So you would go for a 3 there, you would go for a 4, then 1, 2, 3, 4, 5, and that terminates that move. So now you go back in here and you say, okay, so you start from there and you go in a 1, 2, 3, 4, and 5. I want to get rid of some of these lines. So now we can kind of start to see the count like that. I mean, this triangle, it doesn't matter, but here. So 1, 2, 3, 4, 5, and then, I'm getting my tool again in an impulse, and you go in a wave 1, 2, 3, 4, and 5. And this is kind of completes, maybe there's still another push up higher here, and then that completes the sequence, if you want to count it like that. Right now, you notice, this wave here. It's again, it's pretty long, pretty strong. Much larger than this wave at the larger degree of trend. Am I okay with the structure? I mean, I don't have a problem with it. Then you go in a 1, 2. The problem is in this fifth wave, you might have like almost like maybe there's an ending diagonal in here because you got a bunch of overlap as you're kind of finishing that off right in there. So 1, 2, 1, 2, 3, 4, and 5, and then you notice here also this fourth wave here. It's a little bit smaller, right, than this wave 2, and then this push out of here, you must count it as a wave 1, and then wave 2, 3, 4, and 5. So this is one count that could tell you that possibly you might be moving higher, and then you might have maybe a larger divergence with the RSI back in here. Let's say that this move is pushing higher like this, right, and in the RSI it's just not able to do that, and it just basically stays flat, and you're just doing something like that, and then you have a bearish divergence in there. Now the next count that I had and I kind of prepared for you is this one back in here, where I'm actually looking a little bit differently at it, and I'm for reasons that I've explained, because of this kind of truncated move, and the way I kind of see this fifth wave, I'm willing to I put more weight towards this count than towards the previous one, and I'm going in a 1, 2, 1, 2, and then back in here you go in a 1, 2, 3, 4 back in there, and then a small fifth for a third, 4 and 5, 4 and 5. So I'm getting disproportions here between fourth and second. I'm getting disproportions between this fourth and this second in here. I'm getting an extended wave 1 in there. So this is how I decompose that. Go as an impulse. So you can see that's an extended wave 1. Then you go up in 3, and then you're finishing off here in wave 5. And this could be an ending, or even if you push this higher just a little bit like that, you could do that too. And then you have a 1, small 2. And then you have 3, 4, and 5 for third, up in 4, down in 4, and then up in a fifth wave in a very short. Because if wave 1 is extended, wave 5 is usually very, very short. So you can do that there. And then, you're having maybe a WXY in this fourth wave. Let me make that a little bit bigger. So I talk about this because I think, it just kind of shows you sometimes, even on a simple structure, how you can go about looking at this counts, and then you always expect these pullbacks towards fourth wave of a previous degree. So this fourth wave, and as the market continues higher, those levels here provide support, and the corrective legs are pretty nice looking. So and then this next move in here, this is a fifth wave. That was the blow off move right in there, right? And then you can go in a 1, 2. And here's the thing, I mean, you can still have a triangle, compared with this wave second, right in there, maybe a triangle, and then one more push up higher, maybe you'll be a truncated fifth coming out of there in a final push, and then you sell lower. But here's the deal. You have, if you go back to a smaller time frame, let me see if I can go to a 6 hour. What's happening in here is that, and I looked at that on the, maybe it's not as clear here, but I look at this as a 1, 2, 3, 4, 5. So to me, let me see if I can maybe squeeze it in a 1 hour. So that's a 1, 2, large 3, 4, and then 1, 2, 3, 4, 5. So I think this decline here, it's a 5-wave decline, and it's not a 3-wave move. So what this tells me is that, there might be something else kind of happening in here, and you might get a larger sell-off in commodities. And this is kind of how I position myself, at least for about a month or two, that this market, we sold some calls in the pro room. And, I'm looking for this thing to kind of basically do something like this. So this was, let's say, wave A. You're going up in a B wave in here, and then, look for this low to get taken out, and then, maybe another move lower like that, right? I mean, this can unfold in several ways. And, for example, you can have, depending on, what you're targeting and how far this move can really go. But let's say that this was a big top in commodities in a fifth wave. Well, then at the minimum, you should come, let's say, all the way back here, right? And there is a plenty of ways where this could happen. This could be a 1, 2, and then you can get, here, let's do this. You can get a 1, 2, 3, 4, 5. So let's say that's a 1, it's a 2, 1, 2, and then you're getting 3, 4, and 5, and you're starting to push lower like this, right? And that's kind of how the move starts, and you're ready to kind of take advantage of this larger third wave to the downside. Then this becomes maybe a wave 1 at a larger degree, or a wave A, and then you get a B, and then you get a C, and then you correct lower. So for me, all I care for right now is to start to get a tradable move in a sell-off in here, right? And the fact that I've gotten a 5-wave decline after a blow-off top, this is my confirmation that this move in here could be over. And, you know, now I'm willing to, you know, take this trade to the downside. And, you know, obviously if the market moves above those levels, I'm wrong in this approach. And I don't have necessarily to be wrong in the overall count, because I know that this could still travel higher a little bit, right? So you get stopped out, then you're getting a 5th wave, and then you reinitiate the trade. Doesn't mean that, you know, you're wrong overall. It's just that your timing here did not work out, and you gotta, you know, reinitiate the trade, you know, on a fresher look once this market, if it moves it higher, right? But you got to kind of stay patient. This is not a very fast moving market, although it might be on the downside in here, because on the upside it was quite aggressive. So you know, just kind of pay attention to that. Is one of the kind of the things that I look, one of the clues that I kind of follow, you know, when I'm looking for let's say a 5th wave top and something when I want to kind of start and short things. So, you know, again, this B wave could be pretty much something like this, where it's still kind of dragging along. You can get a triangle in a wave B, right? And you can do something like this, A, B, and then down in C. And, you know, this move, maybe it's a wave 1 and a wave 2, right? But still, you know exactly kind of where you're looking shorter term in here. And then you take your clues from the market, see what happens. Right? If it does this, then you got to do that. If it's, you know, if it doesn't do it, then you got to change. So, that's, you know, you will hear a lot of talk in Elliott wave about people, you know, well, the Elliott wave doesn't work, or it's, you know, it's too unpredictable. It's got, you know, too many counts, too many alternate things and things of that nature. And I always say, well, you know, everything kind of does. There is no, you know, real set of guidelines and rules in the market that tell you that, you know, this is how it works. It's all, you know, based on you analyzing your methodology really well, and then taking advantage of certain structures. And you got to be willing to just, you know, adapt and adjust, and don't be, you know, don't be ashamed to do it. It's a normal process, because nobody can read the future, and you can, you know, you have the flexibility to change, and you should have the flexibility to change and not be stubborn in your counts. But, you know, I think this is just, you know, one thing that everybody that kind of does Elliott waves in the beginning is like, oh my goodness, I found this tool and it's going to work. And, you know, then a lot of times it doesn't. It's not your fault, right? The markets do whatever they want to do, and then they create all kind of trends, and you got to stay flexible and be able to listen to that market. So anyway, enough talk about this, guys. Thank you for watching, and I'll be seeing you later. Don't forget to subscribe and like, and visit me in the Pro Room for more videos every single day with market coverage and cryptos and other things there. And I'll see you tomorrow. Bye-bye.